Hello, fellow investor. I want to welcome you to the channel. As I was performing my end of the week close, reviewing all of my charts on November the 28th, as I was going through some of those and making some decisions based on what I was seeing in the charts, I thought it would be a good opportunity to kind of bring you along with the journey on a selected set of charts, what the charts are showing me, and how they help me make decisions regarding any trades that I'm considering on some of these stocks. So I hope you enjoy this video and I hope you find it helpful. If you do, please hit that subscribe button and the like button to help support the channel. I think I have about 15 stock charts to review in this particular video. The first one being Apple, which reached its peak back in December of 2024, and it didn't regain that peak until October the 6th. But in the process, it formed a cup with handle pattern. And once that pattern formed, you take basically the delta between the rim of the cup down to the low, and then you add that to the value at the rim of the cup, and that gave me a price target of $332. On October the 31st, we had a high of 277, so I've drawn a line of resistance across there, and for the last 3 days it has been trading above that resistance line. So I'm watching to see if it can sustain this level and continue moving higher and eventually get to this price target. The RSI is in bullish territory, as is the PPO, and the accumulation is near 52-week highs. The next chart is Realty, and you can see the trades that I've made. I've added some shares and sold a few shares. I've added a resistance line at this high from the 22nd of April, this high from about March the 10th. It is getting back up close to that resistance line. When it reached that resistance line previously, it did pull back. There's also a downtrend line from this high on the 22nd of April connecting these three highs. ADC did break out above that level, come down and partially tested it, and then has been moving back higher. I can see today that we are trading down a bit, and that's probably due to the rising yield on the 10-year Treasury. On the last time on the RSI, when it pulled back to this upward trending level, it had kept support at an RSI of 20. And then when it broke out above the previous high, you can really see that it went on a run of about 7 or 8%. It pulled back and is retesting that level once more. We did have a pullback again to the 40 line. And I like it when a stock pulls back and it holds that RSI of 40. That's better than actually moving back down into an oversold condition. So then what we see here is it has broken above the 60 line. And today it's pulling back a little bit, but I still think that ADC is going to perform well if we get a rate cut in December. The next stock is actually a closed-end fund, and this is BST, the BlackRock Science and Technology It primarily invests in technology and science type stocks. Has been on a pretty solid uptrend indicated by this blue line here. It did break down below that line on about the 10th of November, and for much of November it was struggling with the flatness of the technology stocks and the sell-off in the technology stocks. When it reversed and started making its way higher, I picked up some additional shares. The 50-day moving average will serve as a bit of resistance. It is trading down slightly today, about 0.18%, while the NASDAQ, the last time I checked, was down about 0.44%. So the BST is actually performing a little bit better than the NASDAQ. The 21-day has begun to roll over. The 5-day is also increasing. We did get into oversold territory in November, but have since moved back above the 50 line. If it can break out above the 60 line, to me, that will be a really good sign for the BST. We also have a bullish crossover in bearish territory. But that is some good news for BST and why I've been picking the stock up as it broke down through its upward trend line. The next stock is Citigroup, and you can see my purchases. I did make one sell right here when it stopped, when it hit a stop level. We do have resistance at about the 104 price range. We'll see how it performs as it gets closer to that range. It'd be nice to see it break out above, so we'll keep an eye on this one. The 21-day is increasing, the 5-day is increasing, and the 50-day is increasing. We do have support lines that are down around $92 and $94, but we are making our way back up to this upper resistance line. The RSI is positive. It's having a hard time getting above 60. The PPO is in bullish territory and did have a bullish crossover, so that shows some positive signs for Citi moving forward. The next stock is CNC. We can see the upward resistance line at this high back on the 3rd of February. The next resistance would be this high point in July. We have been in a downtrend since they pulled their guidance back, their third quarter guidance back on the 2nd of July. This had to do with the ACA subsidies and a few other things, but they've really been struggling here. We do have a downtrend line that's connecting to this high and to this high. It has broken out above that, and today it's trading slightly below the 5-day moving average. It is trading down 3.1%. It is still above the 20-day, which is upward sloping, and the 50-day that is upward sloping. The PPO, or the MACD in this case, is in positive territory. The RSI somewhat peaked out on the 25th and is now pulling back. ETR, which is Entergy, it's my utility provider, and I'm showing this pretty long chart that goes back to the beginning of 2021, where it traded sideways for a period of time. The AI trade came into place and it really accelerated. Traded sideways, consolidated for a while, broke out once more, then traded sideways, and we had one additional breakout. When we go to the 1-year chart on this one, we did hit an intraday high of about $97 on the 6th of October, so that's my resistance line. At the Friday close, that was an all-time closing high. Today I see that it's pulling back 2.29%. That looks like it'd be trading right at the 21-day moving average and trading below the 5-day moving average, but it is trading above the 50-day, which has maintained support several times over the past few months. I also noticed that it has held an RSI of 40 since the drawdown that we saw on April the 7th with the tariff announcements, but since that point it has not dropped below an RSI of 40. So I still think that ETR is trading with good momentum. At the moment, we do have a bullish crossover in bullish territory, and the RSI is still positive at the moment. The interest rates for the 10-year are the yields moving higher. That typically puts a little pressure on stocks. One option that I might have on this, since I have several hundred shares, would be to sell some cover calls if I don't think this resistance is going to hold. If it breaks out above that resistance, then we could be seeing another leg higher in this particular holding. Google is past what I consider fair value, which I have calculated to be about $321. It did reach an intraday high on the 25th of November, so that's acting as resistance. I do have some support identified here that goes back to about the 3rd of November, which is at 278. And then I have one that goes all the way back to about the 13th of October, which is about $200, which happens to coincide pretty closely to the 200-day moving average. It is still have an upward sloping 5-day, an upward sloping 21-day, an upward sloping 50-day, and a 200. But it did hit this value of the intrinsic value level, and has been trading lower the last 3 days. One point of concern with Google is we have a downward sloping line here on the RSI, where the RSI failed to get to higher momentum on these higher prices. That's called a bearish negative convergence. So that's something that has me concerned, and one thing I'm watching at the price levels it's currently trading at. It has held that RSI level of 40 since the tariff announcements back in early April. So it's done very well since then, performed very well. Hess Midstream is one that I own quite a bit of stock in. I have a resistance line here at the high of 42 back on the 31st of October, the 31st of July. And I have another resistance line that goes all the way back to January the 31st, which is sitting at 39. We also have these downtrend lines here that are marking some resistance points. It did break above this lower one and is starting to move higher, and even on a down market day, it is trading higher today. This drop we saw here was about a concern about Chevron announcements to close one of the rigs in the Balkan. Recently, it did hold an RSI of 40. And then it managed to break out above the previous RSI level. So that's a positive sign. And I actually bought some more shares today in this one based on what I'm seeing in the charts. Johnson & Johnson traded to an all-time high on the 26th of November. They have been trading downward, and they're down today. This gave me a counter trend idea to either trim some shares or to sell covered calls. On the 21st of November, I did actually sell a covered call for $56. So I think I'm in pretty good shape here with J&J and what I'm seeing in the charts. I think it's probably hit a peak for a little while. The RSI has been very strong with each subsequent high. It's actually had higher RSI. So unlike Google, that with each additional high had less momentum, this one is showing higher momentum with each high. But I think we have reached an upper level. I have a intrinsic value at about 177 for J&J, and I'm seeing support here at about 170 and 160. It is trading way above its 200-day moving average, about 25% higher. It's trading about 10% higher than its 50-day moving average. It hasn't tested its 50-day moving average since about the beginning of July. So this one I think we peaked out, and I'm starting to sell covered calls here. Lyondell Basell, they've been in pretty much a confirmed downtrend for quite a while. They did break out above that level, and on a down market day, they're actually up 1.79%. They've had almost a week of higher highs over the last trading week. They're reaching some resistance here at about 48. They've already broken above the 50-day moving average. If they can break above here and oil prices continue to go a bit higher, we could see higher prices than LYB. Since the prices are trading above my average cost per share, I'm actually buying some shares here, and as they cross over the cost of my existing entry points, then I'll start selling some of those off to lower my average cost per share. The RSI is above the 60 line and still moving higher. We do have a PPO that has moved into bullish territory, and the shorter day moving average is gaining some strength and moving away from the 26-day moving average. So LYB is looking good at the moment, and I'm making some trades just to lower my cost basis here. Meta Platforms, they have an intrinsic value of about $820. I see some resistance at about the 14 May 2025 level of 100 or 666 or so. I see my exit stop level is around 619. In a previous video, I had it set to 576. So as Meta has begun to get higher in price, I've raised my stop level, and that would be above my cost per share. You can see I picked up some shares, and I've also bought a call option, which I don't do very often. It is pulling back today, but I see resistance at 666 or so, and it could be a good time to buy another call and let it run to that price. That would also reduce my average cost per share if that was a profitable trade. Then Altria, they had been on an uptrend that is indicated by this blue line. I have an intrinsic value of about $59 on them. They are pushing that level right now. They do have a resistance level at about 59.57 and another resistance level around $60. Since I have several hundred shares, this could be one that I could sell covered calls on with the target price of around $62.50. The RSI hasn't quite got back to the 50 line. It had been trading below the 40 line. It is in bearish territory. AAPL did have a bullish crossover, but I don't think the price would get much above 62 with an expiration in January or so for a covered call. We'll take a look at Prudential. They did form a cup and handle here that would give me a target price of about 113 or so over the next month. They are trading above an upward sloping 5-day, 21-day. The 50-day is crossing above the 200-day today, and both of those appear to be rising upward after a 200-day that was declining for quite some time. I did pick up a few additional shares, and the reason I did that is I plan to sell a few entry points that are above the levels that I bought these at. So my next level would be anything above about $110.57, then I would sell that particular tranche that I bought at that entry level, and that would reduce my cost per share while maintaining my allocation that I want. And this is just all based on what I see in the charts, that it made it a good opportunity for me to take advantage of a trade like that. We did have an RSI that peaked out in 22nd August at 66.93, and it looks like it's tested that level 2 more times, so that seems to be about the best momentum that we can get. We haven't been into an overbought condition on this one in quite some time. The PPO is in positive territory, and we did have a bullish crossover on the 20th of November. And then finally we get to UPS. So UPS had been in quite a downtrend. I had some resistance lines drawn here that it broke out above this lower one. It broke out above this second one, but it has not been able to break out above this third level of resistance. It looks like today that it is trading above that level, so my next level of resistance would be about $98 or so, $99. I have an intrinsic value of $107. Since it is trading up on a down day, the overall market is down. If it breaks out above this level, I may pick up some shares and trade them up to this next resistance level to about 117, but that would put them over their intrinsic value and my margin of safety. So hopefully you've enjoyed this video and it gives you some idea of what I look for as I'm doing my daily and weekly reviews of all of the holdings that I have in my portfolio, and how the charts help me make decisions and how I approach different trades and options, how I manage my options based on what I'm seeing on the charts. If you found it useful, please subscribe to the channel and also press the like button. And I wish you the best in your investment journey, and remember to trade well. Have a great one.